Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, October 18th, 2022. Before we jump into the charts, just as usual, want to encourage you to please click like each and every time you watch any Wicked Stocks content that's been uploaded to our YouTube channel. It helps us out a great deal in being found, the algorithms, so forth and so on. Subscribe to the Wicked Stocks channel. You'll be notified each and every time new content has been uploaded each and every day. And share the videos, if you would, with friends and colleagues. Let's take a look, once again, the big picture. This is a weekly chart just to show you that a few weeks ago we gapped and obviously closed below this rising speed line at 270.66. That's I'm just going to call it still sort of the mid to upper 260s. There's other things going on up in that vicinity. I don't expect to see that anytime soon. I'll get to that in a moment. But that was a sell signal that indicated at least 206.85 and more than likely the 177.18 to 185.29 band of channel support, which would be a retest of that structure. We tested it in May. That was anticipated in a wickedstocks.com Tesla video in April, and it did contain quarterly selling pressures. It's still in reach. We obviously have rallied off that 206.85 area. We closed below it last week and gapped back above that area on Monday morning, which resulted in a follow-through rally of a modest degree. So that's kind of the big picture still. Now, if we were to close above 227.64 today, then I am at least temporarily off. I'm talking near term, like for the next 2 to 3 weeks, I would be off the expectation for 177.18 to 185.29. But as we continue into December, we can fall back into that zone, and I'll get to that in a moment as well. Let's take a look at, I'm going to see here what chart I want to show you. And I'm going to go with this chart here, at least for the moment. This 223.60 descending channel top, this is a carryover from yesterday, and I've reduced it to a minor point only. The way I see it now, the more reliable upward pivot point, not only through the rest of the week, but through the rest of October, would come with a settlement above 227.64 today. So 227.64, this former trend line that we broke below about a week and a half ago and have yet to revisit to the upside, is our level that could contain buying into later week. From 227.64, we can fall back to 206.85 or lower. We could trade inside this zone through the rest of the week, perhaps. For the next 3 to 5 days, we just may bottom out at 206.85 again, rally back up to 227.64, so forth and so on. On an intraday basis, I have these carefully chosen minor points that you can trade off of, especially if you're an aggressive day trader. 213.01 is the most notable, able to contain intraday selling. Yet if we break 213.01, I think 206.85 is likely again. Where we could, and that is the May low. We did settle below it last Friday, but it is still there as a respectable support level, if only on a 2-star basis, which for me is being able to contain 2 to 3 day lows. So we could bottom out at 206.85 into later week. But if we close below 206.85, I do think the 177.40 to 185.80 area is likely by the end of next week. And that is, once again, this long-term support threshold, which is considered kind of a 1 to 2 month target below 270.66 anyway. The big question is whether we'll have a meaningful counter trend rally back into the 260s before we continue south into the 170s, 180s. Let's take a look at the upside again, and I'm going to show how the 227.64 descending trend line is also in correlation with Friday's high. And I actually think I have that labeled properly right here. I do. 226.26. I don't even have it as a minor point. I don't like to crowd these levels. 227.64, I think, is the more reliable in terms of an upward pivot point, say, through the day. And if we close above 227.64, we've obviously also closed above the high of the low. And that's a pivot point in itself. So closing now back above 226.26 is considered a constructive development for Tesla. And, closing obviously above 227.64 is the buy signal event for the week. And really, really through the rest of October. I think if we close above 227.64 today, over the next couple of weeks, we can make our way back into the mid 260s to low 270s, the 264.71 to 270.66 area. Considered, I'm going to say a 2 week, I don't even want to say 3. With this kind of volatility, inside of 2 weeks, we push into the mid 260s, low 270s if we close today above 227.64. Now, I'm trying to see if there's anything I'm missing here. No, I'm just going to go back to this chart. If we push or open, I don't see us opening, but if we did push through 227.64 today, 241.30 is in reach by the closing bell. We have these minor points at 33.27 and 38.89 that can snag intraday activity on the way up, but I do believe that pushing or opening today above 227.64, the 241.30 level is in reach where we can top out through the balance of the day. But bottom line, closing above 227.64, we have a 2-week rally, I think, in the 264.71 to 270.66 area where we could top out through November and fall off from there. And once we fall off from there, and I know there's a lot of imagining here, so I don't know if this will play out or not, but I could see it playing out. We've had quite the sell-off following the sell signal about 2 weeks ago, Monday. And that sell-off it could have a bit of a spring factor to it to the upside in terms of a counter-trend rally, and that would come into play with a settlement today above 227.64. So yes, we could push back into the mid-260s to low 270s within a couple of weeks and still fall back into the 177.18 to 185.29 area by the end of the year. Once again, closing today below 206.85 looks to be a long shot today, but if later in the week we close below that May low, then by the end of next week we should test the 177.18 to 185.29 area. And these are the levels on the weekly chart. You can see they're a little different here. Those are the daily chart levels that could absorb selling through the rest of the year, possibly well into Q1. It becomes a 1-week objective if we settle today below 206.85. So the way I see it, in terms of the near-term directional dynamic, which is to say through the rest of the week and through next week, bullish above 227.64 if settled above, bearish below 206.85, and we just might congest our way into through this zone for the next few days between 206.85 and 227.64. And I think that pretty much summarizes it for Tuesday's Daily Tesla Report. Please click like and subscribe. We'll be back tomorrow with Wednesday's Tesla Report, and you have a great day.